Welcome to the deep dive. Today we're looking at life insurance, but maybe not in the way you usually think about it.
Well,
We're
go ahead.
thinking beyond just, end of life stuff. We want to explore how it can actually be a really powerful tool for, well, legacy building
Yeah.
and transferring wealth.
It's interesting, isn't it, how often it gets pigeonholed. People think, oh, that's for when I'm older, or maybe if someone's unwell.
Yeah.
But that view really misses a trick. It misses its potential as a proactive financial strategy.
Totally. And that's our mission today in this deep dive. We want to try and shift that perspective for you, show how life insurance, both term and whole life, can be used to protect your loved one, sure, but also to actively build a lasting legacy.
And we'll do that by digging into the two main types you mentioned. Term life,
Mm-hmm.
that's coverage for a set time. And whole life, which is, well, lifelong, plus it has that wealth building piece.
Okay, let's get down to it then. Term life insurance, what's the core idea there?
Okay, so term life, basically, it covers you for a specific amount of time. Could be 10 years, 20 years, maybe 30.
Mm-hmm.
And if the insured person passes away during that term, their family, the beneficiaries, they get the payout, the death benefit.
So it's protection, but with an end date.
Exactly. That's
Yeah.
the key thing. If the term finishes and you're still alive, the policy just stops. No payout. It's temporary cover for a defined need.
That makes sense. It's sort of like renting protection. You pay while you need it, but when the term's up, it's done. No asset left over.
That's a really good way to put it, actually. Renting protection.
So then how does whole life stack up against that?
Well, whole life is designed to be permanent. That's the big difference. It covers you for your entire life, provided, of course, you keep paying the premiums.
Okay, lifelong cover.
Yes, but there's another really important part. Whole life policies also build up something called cash value over time.
Cash value.
Yeah, and this cash value, it grows tax deferred.
So it's not just about the payout at the end. There's a kind of savings element built in.
Exactly right. And this cash value, it can become quite a useful asset itself.
Hmm.
You can usually borrow money against it or sometimes even take withdrawals.
Hmm.
Though you need to be careful there. Doing that can reduce the death benefit and there might be tax implications too.
Okay. So if term life is like renting, is whole life more like owning a home? You've got the long-term security plus something that's building value.
That's an excellent analogy.
Yeah.
Yes. You're building equity in a sense,
Yeah.
while also making sure your family has that financial security for the long haul.
Okay, we've got the basics down. Let's maybe look at some real-life examples, how these actually play out. Tell us about this first scenario you do.
Okay, Chinedu, he's 35, a civil engineer. He's the main breadwinner, got a wife, 2 young kids.
Mm-hmm.
His biggest worry is, what happens to them financially if he's not around, especially during these really crucial years.
Makes sense. So what did he go for? Term or whole?
Chinedu went with term life, specifically a $50 million policy that lasts for 20 years.
Well,
For him, the priority was getting a large amount of cover while his financial responsibilities are at their peak. Kids growing up, school fees, the mortgage,
yeah.
all that.
And the big plus for term life in his case is probably the cost, right? It's generally more affordable.
Absolutely, especially when you're young and healthy like Chinedu. Term life premiums are usually much lower than whole life for the same amount of cover.
So he could get that big Euro 50 million safety net without it costing a fortune each month.
Exactly. And if the worst happened within those 20 years, that money would be there for his family.
Which could be life-changing for them. Paying off the house, maybe covering university costs later on, just keeping things stable.
It's a vital financial cushion when they need it most.
Hmm.
But it's important to remember,
Yeah.
if Chinedu outlives that 20-year term, the policy ends. No payout, no cash value built up.
Right. So for him, it's really about tackling that immediate high-stakes risk during the family-raising years. It's not really about building long-term wealth with this particular policy.
Precisely. It's a strategic choice for temporary protection when vulnerability is highest. Now let's contrast that with Mama Grace, a different situation.
Okay, Mama Grace. It sounds like she's maybe thinking further ahead.
Definitely. She's 55, runs a successful fabric business in Lagos, doing well.
Uh-huh.
And she's thinking not just about now, but about the legacy she wants to leave for her children, her grandchildren. Long-term thinking.
So what did she opt for?
Mama Grace chose a Euro 30 million whole life policy.
Whole life. Okay.
Now, we should acknowledge the premiums for a whole life policy at 55, they're going to be higher than for a term policy, even for a smaller death benefit like 30 million compared to Chinidu's euro 50 million.
Right, because you're paying for that lifelong cover and that cash value growth.
Exactly, but for Mama Grace, the benefits really lined up with her goals. Lifelong coverage, assuming premiums are paid, of course. Plus, that cash value inside the policy grows over time, tax deferred.
And could she tap into that cash value if she needed to during her life?
Yes, potentially. She could look at borrowing against it, maybe to put back into the business, or perhaps supplement her retirement later, or just for unexpected things that come up.
Mm-hmm.
And then, when she passes, her heirs get the 30 million death benefit. And that payout is generally income tax-free. Also, that cash value that's built up, while it might not be the main goal, it can also add to the estate, potentially in a tax-efficient way, depending on the planning.
So for Mama Grace, this isn't just protection. It's actively building wealth, ensuring the business, the family are supported well into the future. It's a deliberate legacy move.
That's it, exactly. It's about providing for the next generation, making sure her hard work keeps benefiting the family long after she's gone. But let's look at another side of things, Emika's story.
Ah, Emika, you mentioned this sounds like a bit of a warning. What went wrong here?
Well, Emika was doing well, businessman 45, but he kept putting off getting life insurance.
Oh.
Just felt, I'm young, I'm healthy, I'll sort it out later.
That's such a common mindset, isn't it? Feeling invincible when you're younger.
It really is.
Yeah.
But unfortunately, life threw a curveball. At 52, Emika got diagnosed with quite a serious health condition.
Oh, dear.
And suddenly, getting life insurance wasn't so simple anymore.
How so? What happened when he tried?
Well, the insurance companies saw him as a much higher risk now. So the result was either they flat out denied him coverage,
Wow.
or the premiums they quoted were just astronomical.
Yeah.
So high they weren't really a practical option for him anymore.
That's a tough lesson. So delaying really cost him the chance to protect his family properly.
It did. He now faces that awful possibility of leaving them with nothing substantial, financially speaking. A situation he probably could have avoided if he'd just locked in a policy when he was younger and healthier. Premiums are almost always lower then.
Yeah.
His story really hammers home that the best time to think about life insurance is often when you feel you least need it.
These examples really drive home how different situations need different tools. Term versus whole life. Maybe we can just quickly recap those key differences side by side, make it crystal clear.
Yeah, good idea. Let's break it down simply. Duration. Term is fixed, like 10, 20 years. Whole life is lifelong.
Right.
Premiums. Term starts lower, can increase later. Whole life is higher initially, but usually stays level.
Got it.
Cash value, term life. No cash value, whole life. Yes, it builds up over time.
Okay.
Conversion. Sometimes you can convert a term policy to whole life later. Doesn't really apply the other way.
Huh?
Death benefit. Term pays out only if death happens during the term. Whole life guarantees a payout whenever death occurs, assuming premiums are paid.
And who are they typically best for?
Well, generally, term life is great for covering temporary needs, like income replacement while kids are young, or paying off a mortgage. Whole life is often better suited for things like estate planning, wealth transfer, leaving a legacy.
So term is crucial protection, but maybe less about long-term estate value compared to whole life.
Yeah, you could say that. Whole life, with that guaranteed payout and the cash value, offers a more sort of predictable, lasting financial impact for the next generation.
That comparison is super helpful. Okay, so we've seen the mechanics. Now let's talk more about that bigger idea, life insurance as a legacy builder. It feels like it's more than just money, somehow.
Oh, absolutely. Life insurance has this unique power. It can create a substantial amount of wealth for your beneficiaries almost instantly when you pass away.
Instantly.
Well, relatively speaking. Compared to saving or investing, where you need time for things to grow, a life insurance payout can provide a large sum right away.
And that immediate infusion of cash can do so much, can't it?
Exactly. Think about it. That death benefit could wipe out a mortgage, clear other debts, so your loved ones aren't struggling with payments.
That alone is huge peace of mind.
It is. It can pay for kids or grandkids' education,
Yeah.
Opening doors for them. It can provide income for a surviving spouse, letting them maintain their standard of living without immediate financial panic.
What about things like family businesses?
Yes, absolutely. It can provide the capital needed to keep a family business running smoothly, maybe help the next generation take over, or you could direct it towards charity, causes you believe in, leaving a really meaningful gift. A lot of people use it for significant philanthropic giving, actually. The payout can often be much larger than what they could give during their lifetime.
Right.
And ultimately, it can just be the foundation for passing wealth down, giving future generations a financial head start.
You mentioned earlier this idea of it being a financial equalizer. Can you unpack that a bit more, especially thinking about communities where maybe building wealth traditionally has been harder?
Yeah, absolutely.
Yeah.
In situations where maybe families haven't had the same access to traditional wealth building pathways like property ownership or extensive investments over generations, life insurance can step in. A well-planned life insurance policy can create a significant inheritance, almost out of nowhere, for the next generation. It provides a substantial, immediate financial base that might have been incredibly difficult, maybe even impossible to build otherwise. It's a powerful way to establish that first step towards greater financial security across generations.
That's a really powerful perspective. Okay, so for anyone listening now thinking, right, I need to look into this, what are the practical next steps? How do you start choosing the right policy?
Okay, first step always is self-assessment. Take a really honest look at your current situation. Who depends on you financially?
Hmm.
Do you have dependents, a mortgage, other big debts? Are you planning for school fees down the line? If those immediate needs are top of mind, term life is definitely worth a close look. It's often the most cost-effective way to cover those specific temporary risks.
And if the focus is more on that long-term legacy,
Then you need to shift your thinking. If the goal is more about leaving an inheritance, ensuring long-term support, transferring wealth across generations, then whole life insurance should be part of the conversation. It's about looking beyond today's needs to the future you want for your family.
but whether you're leaning term or whole, what's the one piece of advice you'd give everyone?
Talk to a professional.
Yeah.
Seriously. Don't try to figure this all out alone. Get advice from a licensed financial advisor
Why is that so crucial?
because they can help you properly understand your specific needs, look at your whole financial picture, your budget, your goals, your family situation, and then guide you to the type and amount of coverage that actually makes sense for you. It's personalized advice.
And lastly, timing. Is there a best time to start this process?
Oh, absolutely. We saw it with Amira, didn't we? The ideal time to buy life insurance is almost always when you're younger and healthier.
Because the premiums are lower.
Exactly. That's when you lock in the best rates. Don't make the mistake of thinking, I've got plenty of time. Life is unpredictable. Waiting often means paying more or worse, potentially not being able to get coverage at all if your health changes. Start now.
So the big takeaway here, the core message we hope you get, is that life insurance isn't just this morbid death plan. It's actually a proactive life plan.
Yes, that's a great way to put it.
It's a powerful tool that can really shape your family's future security and legacy in a positive way.
Precisely. It's not about dwelling on the negative. It's about taking positive, responsible action to ensure the best possible future for the people you care about, whatever happens.
Just imagine that feeling. Knowing the house is paid off for your kids, or your partner is financially secure, or the family business you pour your heart into can continue. That's the real impact, isn't it? That's life insurance working as a legacy tool.
It really is. It's about securing that future you want for them, building something lasting that reflects your commitment to their well-being long after you're gone.
So as you think about your own financial plans, maybe pause and consider, what kind of legacy do you want to leave? How can you best protect and provide for the people who matter most? Life insurance could be a really important piece of that puzzle. Thanks for taking this deep dive with us today.